This exercise is going to demonstrate the establishing and replenishing of a petty cash fund. So let's go ahead and get started. XYZ Inc. has been in need of a petty cash fund for quite some time. The accounting is finally going to establish petty cash fund for the company. With the given below information, prepare the journal entry to establish the petty cash fund as of December 1st, 2000XX, and replenishment of the fund at December 31st, 2000XX. Okay, so first of all, what we're going to do is, as of December 1st, create the entry for the establishment of the petty cash fund, and then at the end of December, which is December 31st, we're going to replenish it. All right. So the journal entry we will need to make is debit petty cash in the amount of the established amount of $300. And that established amount can be any amount. Well, it's going to be a smaller amount because, of course, petty cash is basically petty, small amounts used to pay for items such as delivery expenses, office supplies, and miscellaneous expenses. It's more convenient to pay cash instead of writing a check. So that is one of the main reasons why businesses establish petty cash funds. Petty cash, the account petty cash is an asset account, okay? Because basically what you're doing is you are taking money from your cash account or from your bank account, or basically writing a check, taking that money out and cashing that check, taking that money back to the office and putting it into your petty cash fund. Okay, so at any point, if an employee came in, or let's say the owner needed to, a few dollars to pay for delivery expenses or run out and buy postage stamps, it's a little easier to give cash instead of writing a check. So here we are. This is our journal entry to establish the petty cash fund for $300. Okay, so at this point, the custodian or the petty cash custodian, will have $300 on hand for use. At the end of the month, we will replenish the petty cash fund. So basically during the month, the business will use petty cash for certain things. And in this example, we've got delivery expense, office supplies, delivery expense, and just miscellaneous expense. And at that time, they do not record any of those expenses until the end of the month, where they replenish the petty cash fund. Once they are going through the replenishing of the petty cash fund, they can go ahead and record the expenses. So based on the following expenditure receipts, replenish the petty cash fund. So I'm going to take these expenses and make a journal entry to record them in our accounting system to disclose these expenses and then replenish the petty cash. So my first debit will be to delivery expense, and that expense is stated at $36. Okay. We actually have another one down here, so what I'm going to do is I'm going to combine them together. So I'm going to go ahead and say my delivery expense is $36 plus the $55. Okay. It's for a total of $91. The next item on the list is office supplies. Okay. We used money to buy office supplies or office supplies to use, but we did not record. So there is the entry to record that expense. So office supplies or office supplies expense. And then last but not least, we have our miscellaneous expense. That expense is at $40. So it will go to miscellaneous expense account, and that is exactly what we debit. The offset or the credit to this will be to cash. Okay, so basically what you're doing is you're taking the $91, the $80, and the $40. You're basically taking that amount out from your checking account, putting it back into the petty cash account. Okay. That is why you go ahead and credit cash for the $211. there you go.